Today we're going to be talking about overextended markets. Yes, how do you identify them? How do you trade them? That's what we're going to be getting into. There are tons of ways of people that identify these overextended markets. People might be using stochastics, RSI. They might be using Bollinger Bands. They might be using some other type of trading methodology or some other trading indicator. Okay, so hey, I'm going to talk to you guys about how I identify it using the supply and demand methodology. Really quickly, like I said before, some people might consider the market overextended when you see here price is piercing through the bottom of the Bollinger Band. I think that is totally valid. Bollinger Bands is just an indicator of given where price is over the last 20 to 50 candlesticks, and it's kind of giving you a range of this is the high, this is the low. Then when prices are breaking through the bottom, people are thinking, hey, it's going to reverse from here. Same thing for stochastics RSI. When prices get overbought or oversold, people start determining the market, hey, it's oversold when prices are touching the bottom 30%, and vice versa. It's overbought when prices are touching the upper 70% in this area. So that's when people start looking for selling opportunities. That's just another way that they view the market as overextended. But how do I, as supply and demand trader, view the market as overextended? Well, I use something called the elastic band theory. This is a technique that my mentor brought on to me, and I thought it was really interesting. He talks about if you have three continuation patterns in a row, here, right here, drop, base, drop, drop, base, drop, drop, base, drop, drop, base, drop. We actually have four drop, base, drops in a row. And when we have three drop, base, drops, or rally base rallies, we're going to cover 3 to 4 trading examples to best help you so you can identify and trade these types of trade setups. So like I said, you have 3 to 4 drop base drops right here, or you could have rally base, rally base, rally. Okay. When you have three continuation patterns in a row, we consider the market overextended. Now, I still think it's okay to be looking for buying or selling opportunities. In this case, selling opportunities if price pulls back into a supply zone, but it's definitely a lot lower quality because the market has already gone so far down. It seems like price continues in that same direction. And then as soon as you start trading that direction, it finally reverses and you're like, what the heck is going on? I get it. But when you see three drop base drops in a row or rally base rallies in a row, that's when I determine the market is overextended and I'm waiting for that reversal to happen. And I mentioned here, this was a post I was talking about last week saying, hey, I think the Swiss market is overextended. I'm waiting for a pullback of buyers to be coming in or sellers, depending on what currency pair you are looking at. So I did take a note, hey, it is very weak. What I need to wait for is the elastic band effect. And when we have these three patterns in a row, we call it the elastic band effect. It was taught by my mentor. So I really like this setup. It's when you stretch a rubber band. If you grab a rubber band, you stretch it and you let go. What happens? It flies back and slaps your wrist, right? It hurts. An example would be like this. Okay, you got this piece of rope. With it not stretched out, what happens? I let go, it just drops, right? Nothing too crazy. But if you stretch out the band and let go, it flies, right? That's like having drop, base, drop, base, drop, three drop, base drops in a row. The market is getting very tension, it's getting very strong. It's getting overextended. And then when it finally snaps, it snaps, It's not just like here where you see lower lows, lower highs, lower lows, lower highs, and they're just gradual impulse move correction, right? Overextended, drop base, drop base, drop base, drop, or rally base, rally base, rally base, rally. Let go, boom, it finally snaps. Same thing here, right? Very strong move to the upside. We break that downward momentum, opposing zones being removed. That's one of my favorite setups. And then I start buying the pullback if prices return into it. And let's get into a trade example because I think this is a good opportunity. But keep in mind, we are trading some difficult times right now. A lot of the money is going into the dollar. And so one of the pairs that I was looking at was USD Swiss on this because we had an overextended market. Rally base, rally base, rally base, rally. We broke the momentum. We removed those opposing zones, right? And I'm looking to sell back up on here. But given the fact that I'm going to be selling against the US dollar, which I don't think it's probably the smartest idea right now, this is not a trade that I want to be holding for 30 days to 2 weeks, right? I still think it's a good opportunity that I'll probably keep an eye on, for maybe a 1-to-1, a high probability 0.5 to 1, 1-to-1 type of trade with small risk. Why small risk? Because all the money is pouring into the US dollar right now. I don't think it's a wise idea at finally calling the top in the market of the US dollar and thinking that this thing is going to go all the way back down, right? I just don't think it's a wise idea. Now, if I don't want to take that as a long-term trade, I could take it as a quick trade, 1-to-1 or 0.5 to 1, or I could use my daily as my highest time frame and then go down to smaller time frames from there and look for selling opportunities. So now once prices come back up, I'll say, hey, I'm going to go down to the 30-minute or the 1 hour or the 15-minute, and I'm going to look for selling opportunities, the same setup I always trade, breaking upward momentum lines, removing the opposing zones, making sure it's a quality zone, right? Always making sure it's a quality zone. I see it all the time, breaking momentums, opposing zones being removed, but it's a crap zone. I get you guys messaging me on my social media at Moneyball Austin, Facebook, Twitter, Instagram. You guys can message me. And I'm like, yeah, I don't like the trade. Poor quality trade setup, right? So an example of this, let's go into USD Mexican. Actually, let's pull, yes. This is a trade review I did. I made a video on it, but this was one of the overextended market ones. We had price down here low on the range. Let's look at this. Low on the range. Overall, these buyers seem to be stepping in. Anytime down in this rectangle, buyers were stepping into the market. So, hey, if and when prices return, I like it. It finally returned a couple weeks ago, right? But what did we have? We had drop, base, drop, base, drop. Overextended market. I'm thinking in my head, hey, I'm in a great higher time frame demand zone where previously a lot of buyers have been coming in over the last 15 times. I got an overextended market. I'm waiting for this thing to take up, break momentum, remove the opposing zone, have a good quality zone, and then I trade the pullback. That's what I did. And I'll show you guys the trade review. I'm not sure if I made a video on it or not. Maybe I did, maybe I didn't, but I will post that right now as I'm speaking about that was kind of the top-down analysis, right? Breaking that momentum, removing that opposing zone. So that's another example of drop, base, drop, base, drop. The market overextended, right? And boom, this works for every time frame. 1 minute, 5 minute, 1 hour, daily. It works for it all. It's one of my favorite setups. Let's look at Euro USD because this was a trade setup for a sell that I ended up taking, but it was a loss. I have this already drawn out because I just finished with our Sunday meeting in the private group and we were talking about this type of stuff. So in this case, we have rally, base, oh, sorry guys, I should probably be muting this stuff to make it look a lot easier, right? I had those indicators on. Here we have rally, base, rally, right? Breaking upward momentum, removing this opposing zone right here. Let me redraw this. Rally, base, rally, base, rally, base, rally. Okay. We break that upward momentum. We remove that opposing zone. We have a rally base drop up there. That was a trade that I took. I ended up losing. All right, so they're not going to win every time, but I really like this because it's a snapback effect. You finally get a very strong move and it takes off in the opposite direction when you finally break the momentum in those opposing zones. It's one of my favorites. They don't come up too often, but once again, you've stretched the band, let go, it snaps, right? That's kind of the same theory here. Now, if the trader didn't want to take that as a whole setup, that's totally fine. If they wanted to use that as a daily zone and then go down to a smaller time frame like the 5 minute or 15 minute or the 1 hour and look for selling opportunities, I think that's totally fine. That's great. No problem. Same thing back here in this demand zone. I think it's a lower quality because market's been overextended. It's been rally base, rally base, rally base, rally, but I still think it's valid, you know? So really quickly, let's jump back to that USD Swiss because I did have those indicators. I just want to make sure that you guys see it, or the Swiss market, the currency. There it is, right? See how obvious that looks? It looks way different. Drop base, drop base, drop base, drop base, drop. Overextended, shoots up, right? So you can see it's a completely different market than what it was over here before. Downward trend, lower low, lower high, lower low, lower high. I totally think it's okay to be looking for sells when you're touching the upper portion of this, but it's a different market from a month ago versus the last 3 weeks. Completely different, right? So that's how I identify an overextended market, how I trade them, right? Waiting for the momentum break, opposing zones to be removed, and a very strong quality zone to be created. And then I buy or sell the pullback. If you guys would like to learn more on the supply and demand trading, you could head over to my tips playlist on my YouTube channel. Go to playlist, and you can see right here under tips, supply and demand course part 1, what is supply and demand, all that good stuff. And you can also pop over to moneyballtrading.com and get your full free trading training there. All right, where you get tons of bonuses, my top 3 secrets on how to become a consistently profitable trader, why 90% of the people are losing, and get a ton of bonuses and access to extra videos as well. So head over there. That will all be in the description. If you have any questions, hit them down below in the comment section. If you want to reach out to me on social media at Moneyball Austin. Once again, I appreciate you guys liking this video, subscribing, and I'll see you in the next one. All right, bye-bye.